the firsts of many kinds that the Indian Institute of Technology has now brought about. In a first of many kinds, IIT is all set to get its first woman director. Preeti Aghalayam has been appointed as the director in charge of the IIT Madras' Zanzibar campus. The Zanzibar campus of the IIT will be the first offshore campus of IIT Madras. And Preeti Aghalayam is an alumnus of IIT Madras, where she completed her BTech in chemical engineering. Remember, it's the same IIT that has produced the likes of Sridhar Vembu, founder and CEO of Zoho Corporation, Chris Gopalakrishnan, one of the co-founders of Infosys. Preeti Aghalayam, incidentally, will take charge as the academic session begins in the month of October. And we have the pleasure of speaking to Preeti Aghalayam as she joins us live here on the show. Preeti, thank you so much for taking time out to be with us over here. Talk to us. How does it feel? Talk to us about the moment when you were told about this. It's a first of many sorts. It's the first offshore campus of your alma mater, and here you are heading it.
Thank you so much, Mr. Krishnakumar, for having me. How was the feeling? It was equal parts exhilaration, excitement, intimidation, and that lot of fear as well of the unknown. And it's like jumping off into uncharted waters. But I must say, I'm really excited, feel very supported by the Institute and all my friends and family, and also the many new friends that I've made here in Zanzibar over the past several months that we've been in discussions about this.
Right, Preeti, tell us about, first of all, help us understand what the Zanzibar campus is all about. What is an IIT offshore campus? How does it work? And your vision and mission for the Zanzibar edition of IIT.
Sure. I think the thoughts about an international campus have come mostly from the NEP 2020 and the further deliberations by various committees about how it's worthwhile an exercise to internationalize our. We're top ranked in the country, but also diversity adds a lot of very different benefits in academic institutions. And we've been figuring out how to bringing the globalization, internationalization of academics. And one of the biggest steps we can take is to go put a full-fledged physical campus abroad. We've been in discussions at various levels about an activity like this. And the Ministry of Education, in fact, put out sort of a call saying that if you're a country that thinks that you can host an IIT campus, write back to us. And the government of Tanzania Zanzibar was one of them that reached out in a very specific, very encouraging way, and with the Ministry of Education in India and here and IIT Madras. We've been in several discussions. So, of course, the vision is that this will be, the degrees will be from IIT Madras, and the sanctity of and everything that means will be held over here. The strength of our academic programs, the rigor of our selection processes for both for students and for faculty will be brought to bear over here. It's a new region. We share an ocean, by the way. So, you start swimming in the Indian Ocean at some point, you'll get to Zanzibar. But I think it will be to serve the educational needs of this region in a very meaningful and impactful way. Maybe even a game-changing kind of way will be very important. But the most important aspect that we would like to consider is that it's about the students. It's about making sure that the really smart students, which we will select into cohorts of which we'll select into this campus, get the best education, get the most aspirational careers at the end of the time that they spend with us. Of course, IIT Madras alumni, and you've mentioned a few of the big names here already, they are what are contribute in a big way to our continued success. And we hope to get the same sort of,
Right.
experience for students over here.
Right. The one thing I want to ask you that everybody asks, from IIT people is this. IIT is the premier educational institute of India. Apart from IIM, the two most globally renowned, education institutions from India. And the questions to them is always simple. You create these great brains, and these great brains eventually leave the country. And they go and they invent new things, file patents and, get IP rights for things, for other countries. And here you are, IIT itself going outside India's borders. Talk to us about, driving innovation and the focus on patents and original ideas generated out of IIT, remaining within IIT and sort of, contributing to India.
I think the world is changing now. It's become a much smaller world at this point of time. And meanwhile, India has also grown very big. So whatever research innovation you're doing, you solve an India problem, you solve a world problem, basically. So I don't think we need to worry about that anymore. And I think that is one of the articulations of this whole effort that even us in academic institutions have been looking in terms of internationalization and globalization. I don't think we are overly worried about this. The type of innovations that are coming out of our students and our faculty colleagues is meaningful for the entire world and certainly for India. And now with this new activity that we've launched, it's the Indo-Africa story and innovation, problem solving, picking the most challenging aspects that are faced by these societies and putting together scientific solutions for them. I think it's an exciting frontier, and smart students will feel challenged by this and take this bull by the horns is what I feel.
All right, talk about the same. So, one add-on question to that. The talk is these days, not just IIT, any educational institution is about creating industry-ready alumni of the institutions. From that perspective, talk to us. How are things evolving at IIT Madras, and now by extension to the Zanzibar campus?
Oh, absolutely. Perfect question. So we found that, of course, the conventional engineering science education is fantastic, very foundational, very important for training young minds. But interdisciplinarity is key. And a lot of those silos that we've had over the decades in terms of, chemical engineering versus mechanical engineering, these are breaking down. We are recognizing these trends. The interdisciplinary programs that we have at the master's level are extremely popular with young students. And we understand why, because that's where the fun, interesting, challenging, exhilarating jobs are. So with this campus as well, we'll ride on that trend. And even the first set of programs that we have, which is going to be in data science and artificial intelligence, are put together for this reason, like you said, to have something that is really exciting and meaningful for young people to take on and take forward into their careers. And the vision definitely is that to continue in this direction, meaningful interdisciplinary programs, which will build job-ready students that will hit the ground running when they graduate from this campus.
Right. And there's only one thing left to ask you. You are the first woman director of an IIT. Talk to us about, and engineering, is again has that whole, bias towards, one gender. Talk to us about, breaking down those barriers and what, having a woman director at an IIT would mean for more women IIT graduates, more women patent filers from IIT, and, more women PhDs from IIT.
So I'm a chemical engineer. I'm an IIT Madras trained chemical engineer, and I've all, of course, in my graduate classes as well, I've been a minority as a woman, and a part of a minority as a woman, and also as a faculty. But I hope that somewhere it's inspirational for young women to take on. There are many challenges that we have to sort of encounter and cross before our society becomes absolutely gender equal. But I hope that we'll do better in that direction going forward, and that young women these days will aspire for absolutely the biggest thing that will be good for them, that will marry what they have inside them with what the society needs.
Right, we'll leave it at that. Preeti Aghalayam, thank you so much for taking time out, in between your busy schedule to speak to us here on Business Plus on News 9 Live. Wishing you all the best as the director, the first woman director of an IIT at IIT Madras Zanzibar campuses. Wishing you all the success and hope we talk again soon when IIT Zanzibar comes in the news again. But for now, we'll leave it at that. Thank you so much for joining us, Preeti Aghalayam, and wishing you all the best.
Thank you very much for having me.
Right, that was Preeti Aghalayam, the first woman director of an IIT, joining us here on Business Plus. But time now here to move on away from that and get a quick check of what the markets shaped up like for the day. Bear in mind, a lot of news affecting the markets, specific sectoral stocks getting affected because of the news, because of all the news surrounding GST as well. We have Suyash now joining us in the studio. Suyash, talk to us. Obviously, a lot of chatter around the online gaming, company related stocks. But, if you can talk to us about the markets per se, and then tell us, all the news that moved all the stocks for the day.
So, Krishna, let's start with the gaming stocks as they were in focus today. Gaming stocks, the 4 listed entities, gaming entities, crashed as much as 23% in intraday trade today. So now, Delta Corp was fell the most. At close, it was down about 23%. Nazara Technologies was another one. It fell about 2.55%. And Zensar Technologies ended 2.19% lower. Meanwhile, On Mobile Global Zensar Technologies ended with positive gains of about 2%. And On Mobile ended with losses of about 1.13%.
Right, so so clearly the online gaming related stocks taking an absolute beating as far as the markets are concerned. I'm guessing when the moment the news came out yesterday, said the expectations were these stocks are going to get hammered.
Definitely. I mean, if you hear from a lot of industry experts, it will be very detrimental. The 28% levy of GST will be very detrimental for the industry. And we saw it in the markets today as well. 23% Delta Corp fell. So, you can... Literally,
the percentage of GST is the percentage with which some of the stocks fell down. That's what Suyash is alluding to. The only question is, will they ever find any kind of a recovery in the near term? Because the way that the GST finality has come about, it basically means that if you are into any one of these things and you say you put 100 rupees into it, out of which 30 rupees straight away goes into taxes. So good luck for you that you make at least 130 so that you don't make a loss.
Definitely. And I mean, even if you see the reaction, it is the initial reaction of the stocks. And I mean, 20% fall in a single day is a lot. So we can clearly see that the gaming industry will be will be affected by the GST levy.
Yeah, online gaming industry is going to have it very difficult. So we'll have to wait and watch on that. So there's no recovery path that is seeming in the immediate term, at least. We'll see how much lower these stocks can go going forward. We'll have to see on that. It's been a hard day for the online gaming stocks. But talk to us about the markets per se. Sensex, Nifty, they were on a roller coaster ride last week. But talk to us about how things have panned out. We're just over the hump. We're in the middle of the week. Tell us, how markets traded for the day.
So since Friday, Krishna, the gains have moderated on the markets. Although the markets have ended on higher in the last 2 sessions. Even today, the index was for the majority of the session, it was trading in the green. But in the last hour of trading amid selling pressure in IT stocks, the market fell because, as we know, the results of IT bellwethers, TCS and HCL are due today. Now, at close, Sensex was down 0.34% at 65,393 level. The 30-share index touched an intraday high of 65,811 and an intraday low of 65,320. Meanwhile, Nifty ended 0.28% lower at 19,384 levels. It touched an intraday high of 19,507 and an intraday low of 19,361. Now, the broader markets, on the other hand, Krishna, continued outperforming benchmark. Nifty Mid Cap 100 was up about 0.43% and the Nifty Small Cap 100 ended 0.76% higher.
Right, some of the big losers in trade today, if I may ask you, Suyash, one is Tata Motors and the other was all the Adani Group, Adani Enterprises stocks. Talk to us about them, if whatever you're picking up on them. So as far as Adani stocks go, you've seen the fact that the Supreme Court has given it very clear to SEBI that by the 14th of August, you have to complete your investigations into the Adani Group stocks and then put out a final report. So clearly, nothing much has moved as far as the case is concerned, but there was a deferring for the plea that was filed. For the Supreme Court has deferred it. Talk to us, how Adani Group stocks performed for the day.
So Adani Group stocks also, Adani Enterprises, in fact, Krishna, was among the top losers on the Nifty today. Adani, it fell about 1.44%, and Adani Ports, which is another Nifty constituent from the conglomerate, fell about 0.78%. Now, IT stocks were some of the other major losers in today's trade. Now, the expectation is that IT sector will have another muted quarter, given that the slowdown of new orders coming in. So TCS and another IT bellwether, HCL are going to declare their results later today. So the markets are
you're seeing the Infosys stock right there, top Nifty losers, Suyash, more than 1% down. So clearly the point you're making about IT earnings set to be muted, the market's already factoring in for it. Right. Basically, the markets are saying that we know the next quarter results for IT companies are going to be not all that great because the order books have become thinner. The orders coming in have become leaner because of the slowdowns and the recessionary trends in Europe and America, the biggest clients possible for all the Indian IT companies. So clearly, that is a very clear trend over there. Let's also talk about the positive trends that you are witnessing in the markets today. Some stocks are doing really well as far as the big gainers go. Any particular trends that you're picking up? Because we're talking about all the downtrends, online gaming problematic, IT problematic. Any good green shoots that you're witnessing in trade today?
So like the entire financial space was under pressure today, but Nifty PSU banks remains an outlier. It was up about 0.83%. It has been on a winning run in the June quarter itself. It has outperformed Nifty and it's up about 18% almost. So the overall banking situation improving, the asset quality of the banks improving, the NPAs coming down, they are really driving that index higher, the PSU bank index.
The PSU bank index is being driven higher. But Suyash, you're talking about a over 200-point correction in trade today. If I may use that all-important word called correction, because I don't think people use the word correction. And ever since the rally up that we've witnessed over the last month or so, there's always talk of the fact that there is a possibility of a correction. When something like a 200-point fall goes, it's not viewed as a correction, is it, Suyash? It's just the ebbs and flows of another bull run.
Definitely, Krishna. Also, we need to understand that a lot of macroeconomic, indicators are due. Like the U.S. inflation print will come out later today. India's inflation print is due, and now there are stock-specific movements that we'll see because of the earnings season starting. So, despite that, the index has largely, consolidated this week, whereas the expectation was that we may see some profit booking after a 4% run-up last week.
Right, 4%. That's the very important point, Suyash makes. 4% run-up, ladies and gentlemen, in the stock markets last week. All those holding on to your mutual funds, all those holding on to your SIPs, all the sectors that he's talking about. So keep a watch out of that as well. So 4% run-up in the last week. This is sort of markets, staying at that level. It's not, galloping further along the way, but it's sort of consolidating at those levels. And that's what the analysts are saying. There's still a bullish bias to the market. But a point I would really like to take upon that you're talking about is that lot of macroeconomic data expected, be it in India or abroad. Talk to us about US inflation data. I mean, the US inflation data, jobless claims data, all of these impact Indian markets. And talk to us, how are Indian markets approaching the upcoming US inflation data?
So if the inflation print in May was about 4%, so if the trend will obviously be one of the things that we'll track. And they have a cutoff limit of about 2%. So if the inflation, which is expected to come down, if the trend continues to remain, we can expect another rate hike from the US Fed. So that could be a very big pressing point for the market going forward.
That's where the secret is. If inflation doesn't get controlled in the US Fed, the US Central Bank will hike rates, and that will definitely have an impact on rates here in India and the stock markets here in India. So yes, thank you so much for giving us that 360-degree roundup of the stock markets and helping put things into perspective. So, ladies and gentlemen, that's the D Street, Dalal Street update. But we're going to continue the show here on one of the things that we picked up upon as far as the stock markets are concerned. And that's to do with all the online gaming stocks that have taken a beating, a battering, if I may, in trade today. And that's because the GST Council announced that the bets placed in online gaming and casinos will now face a 28% tax, 28% GST. The tax on online gaming companies would be imposed without making any differentiation based on whether the games required skill or were based on chance. India's finance minister, who's also the chairman of the GST Council, Honorable Minister Nirmala Sitharaman, said that the decision to levy maximum tax on online gaming and casinos was not intended to kill the industry. But given the quote-unquote moral question, it cannot be taxed at par with essential commodities. The All India Gaming Federation, AIGF, which represents companies like Nazara, Gamescraft, Zoopy and Windsor, said that the decision will wipe out the entire Indian gaming industry and lead to lakhs of jobs being lost. And now, let's understand the real impact of this particular move. What does it mean? We have the CEO of All India Gaming Federation, Roland Landers, now joining us here on the broadcast. We also have my friend and colleague Karthik Malhotra joining us here in the studios as well, helping us understand what all this means. Roland, I'm going to begin with you. Talk to us. On one hand, you have the online gaming industry crying foul, saying that, quote unquote, this is the end for us, whereas the others turn around and ask the same question. Is it right for them to demand the same level of taxation as an essential commodity?
Yeah, so thanks, Krishna. Just to give some context to the impact across the ecosystem. As you are aware, the ecosystem is made up of the game developers, the gaming companies, and the consumers who are the gamers themselves. Now, as far as the if this new methodology is implemented, then the impact is across the ecosystem, starting with the consumer. The the cost for him or her to participate in a game gets increased by 3x or 300%. Also, the impact on the gaming platform will be a whopping 1100%. The movement of valuation from GGR to the face value as indicated in the press con yesterday, and owing to which it will so happen that the GST value that a platform pays would be higher than the platform revenue.
Roland, stay with us. We also have our friend and colleague Karthik Malhotra continuing to join us here in the studio. Karthik, thank you so much for taking time out. There are two things that I honestly want to ask about. One is the fact that these companies, some say that they tried very hard to approach state governments to get their way through. But then this is a way of the finance ministry sort of keeping a check on the entire validity of this business by taxing it at the right way. They've identified this as a sin tax, like a tax on alcohol or a tax on cigarettes, isn't it?
Absolutely, Krishna. And I think there is obviously some sort of a parity that the government has tried to draw here, like you mentioned, between games of skill and games of chance. Now, many financial experts out there are pretty much saying that even investing in stock markets, for that matter, could be a game of skill or a game of chance. So will that be the next thing to come under the taxman's or the taxwoman's radar? That does it then make sense to even tax, let's say, every 100 rupees bet that you're putting, informed bet in some cases, on stocks? Should that also be taxed at 28%? So, so that is one of the issues. I think not a real issue. I think that is more conjecture than a real issue.
Yeah.
But I think somewhere it's also emerging that states like Goa and states like Sikkim are now being brought through casinos, are being brought into this widening of the tax net per se, and getting some revenue for the central government and the state governments through this sin tax that you mentioned. Now, Roland, my question really is, while your industry has obviously taken a bit of a beating and many are calling this as the death blow to the gaming sector per se, I think some concerns that have also been raised is this fear of gaming companies setting up their headquarters outside the shores of India, and this would, instead of widening the tax base and tax collection for the government, actually aid in siphoning off Indian money outside the shores of India. Are these concerns valid?
Not valid. None of the the members of the AIGF have. And not to my knowledge, any of the Indian companies who are not headquartered here. Now, coming to, while you brought up the subject, parallelly we know that there is, a large offshore illegal gambling industry thriving in India. In fact, the advisories that came from the MIB to stop their advertising happened during the IPL and before that also. Now, when I mentioned about the impact on the gamer, what will inadvertently happen, it's not the intent of anybody, but what will happen is when the participation amount by a gamer goes up by 3x or 300%, obviously he or she would seek opportunities in these illegal offshore platforms and companies, and hence there could be this movement, because those people are not under the ambit of this jurisdiction, and neither do they pay any taxes.
Okay, help me understand this calculation of 3x or 300%, because my understanding is that there is a 20% outgo. For example, if you were to get into a platform and play with 100 rupees as cash, now straight away 28 rupees from that gets deducted as GST. You're left with 72 rupees to play, and if you happen to win, then there is a TDS of another 30%. Number one, is that the correct way to understand the implication for the gamer? And then what is this 3x calculation? Can you help us explain, perhaps with the same example of 100 rupees?
Yeah, so what happens is, when there is so as you rightly said, 28% goes off, and so the ability for a gamer to participate, while and as you know, the platform fee is an average of 10% for the company, right? So what is left for the for winnings, right, for the gamer, in this case it has been put on face value. So that means that every time there is a participation, what the gamer has the opportunity to win is reduced by that much percent. So in other terms, the opportunity for the gamer to participate and win is decreased by that much percent, or increased by 300% or 3 times. The same value, 100 rupees, would fetch him participation in a game, would now 3 games earlier, would now fetch him only 1 game.
Understood. Got it.
Right. I have to ask you a very simple question, Roland. One is that there is online gaming and there's online real money gaming. And that's where I think the problem seems to have erupted. And you've seen online real money gaming companies run into problem with state governments. For example, online real money does, get classified under gambling. The MeitY Department of the government has worked very hard to drive a difference between them. But the fact of the matter is that gambling is a state subject. So hence you have Tamil Nadu, the state of Tamil Nadu, taking it up as an issue and wanting to do away with the online real money gaming. There's online gaming, there's online real money gaming. And then you've seen that happen with Telangana as well. They have pushed back these companies, and now you're finding these companies being pushed back in the form of this GST taxation. So there is that morality question that is hanging over the industry.
Yeah, so just to clarify, Krishna, so the online gaming industry is the overall horizontal, the pay-to-play side of gaming, which is about 80% of that market. So when we look at the whole online gaming industry, skill gaming industry, obviously, the 80% to 85% is the pay-to-play side of gaming. The rest could be free to play and games that are showing in the background of your channel, which are video games, which can also be which have certain revenues that are in-app in nature, and some are led by advertising as well. So now that is the whole log. Over the last 1.5 year, you're absolutely right. We had the opportunity to to work with the government, and I must mention that we had super support from the government in this movement for the scale gaming industry from the states to the center, and that is why the where we are of having a nodal ministry in the Ministry of IT Electronics, and the setting up of the SRBs to self-regulate this industry as it was already being done, but now under the aegis of the MeitY. So all that support that has come from the government, we believe that if this can be re-looked at, because that is why the impact is necessary on across the ecosystem and the stakeholders therein. If there is, we are still hopeful that this can be looked at in a progressive regime manner, so that the objective of increased taxation can also be achieved, and the industry also get a chance to continue to grow and reach its potential.
So, Roland, what is your specific ask from the government? At this stage, we know what the government has proposed and pretty much likely to implement. Do you have a specific ask, a specific amendment in mind which you think the government should take heed of?
Not as such. I mean, we the teams are looking at every angle, but GGR or the platform fee rather than the total face value is what obviously we had the opportunity to make representations and continue to ask for.
So talk to us specifically
as
about
evaluation.
Okay, so talk to us specifically about platform fees. What is the average platform fee? How is it charged? Is it charged per month, per subscriber, per game? And therein, what is the kind of GST outgo that you think the government should consider?
So with platform fees are, you can average it out at 10% for the service provided, and that would be on the total participation in the game.
10% of what?
Of the participation in a game. So there are continuous games. There are other types of games. So let's say all of us participate in a game. So whatever is the participation amount in a game, the revenue for the service provider is 10%, an average of 10%.
So you're saying the consumer should not be liable to pay any GST? Platform providers who take a revenue by way of platform fee, which is roughly 10% of the participation value, that should be charged at a 28% GST. Is that my broad understanding of what you're trying to say?
That was what was also recommended in the GOM report, second report.
Okay. And what about the TDS of 30%? Now, the government has also been constantly trying to arrive at the right way to tax online gaming. Now, on every winning, there is also a 30% TDS.
That is applicable on the players. Yes, it is.
Okay. But right
now, consultation happened with the industry, and that was what was proposed, and it was also suggested and put into practice.
Okay, and this, of course, I'm understanding is net of losses, right? So you can offset your losses by gains, and therefore, this 30% is going to be on the net amount and not on every gross winning.
It is on a cumulative net.
Yes. It's on a cumulative net, right? Got it, Krishna.
Right. The only thing I want to ask you is that, Roland, you've seen the news come out, you've seen the reactions. How much of an impact do you think it's going to have on the demand levels for online real money gaming and online gaming per se? As you were talking to us and telling us, 80% of the industry is online real money gaming, and the rest is non-money gaming. So talk to us about the impact of a move like this on the industry.
I think within the media entertainment sector, the online gaming, in the last 5 years has been delivering, a CAGR of in the excess of close to 30% or in the excess of that. And, today it is a $2 billion industry, and it was estimated to reach double by 5 billion by 2025. So I think as far as the online gaming industry itself being a preferred destination for as a source of entertainment for gamers, I think that would remain intact. This is more for the business economics, and I've already mentioned the impact across the ecosystem at the outset. So I think we are yet to see, but I think it should be, as far as the being a preferred destination globally and in India also as a form of entertainment, I think that will remain intact.
All right. Roland, stay with us. Karthik, the way we've seen the taxation evolve on online gaming, I'm only reminded of what happened with cryptocurrencies. So the TDS, when TDS was levied on cryptocurrency transactions and cryptocurrency gains, there was huge criticism on it at that stage. But the fact of the matter was that it was a sort of a pressure release valve, if I may, of all the pressure that was building in crypto, and all the people were going to crypto. And in fact, after that move, crypto transactions crashed by 60%. That's what happened after the TDS move into crypto came about. I mean, we'll have to check as to where they are today. Yeah. But similar kind of an impact is what I thought would happen with the online gaming industry as well. But I think it's interesting to see how government is treating this online real money gaming the same way it treated crypto. Try to catch in on it through taxation.
That's right, Krishna, except I think the difference being that in the case of crypto, there wasn't any GST, because I think implementing GST on crypto would in some way have made crypto legal in India, and crypto continued to be on the cusp of neither being called as a legal asset class or money, and nor was it technically illegal to trade in crypto. So it kept hanging in the balance on that fine line of being between legal and illegal,
and
definitely frowned upon,
and continues.
So, and I think the second difference there was that you would be taxed 30% on any gains that you made by way of trading crypto, but those gains would not be offset against losses. So, a 30% on every gain you share with the government, and the loss is all yours. In this case, I think what Roland was also clarifying, that this is net of losses, so it is your income cumulated against your losses. So overall, I think the online gaming market has not been dealt with yet as harshly as the crypto market was dealt with. But in the retail participation, we've seen the stocks of 3 out of the 4 big gaming companies listed on Indian bourses tumble today. In fact, companies like Delta Corp have hit the lower circuit, down as much as 24% or so. But again, if you were to take this conversation back to Roland, I want to understand from you, Roland, now, what are the options available? Because gaming and the sin that is associated with gaming, rightly or wrongly, I'm sure you would feel wrongly, the sin associated with gaming and the kind of addiction that gaming is compared with, does it leave the gamers, the real players out there, with too much choice? I mean, it is not easy to junk away a bad habit overnight, or a good habit for that matter. And are they going to find solace in any other sort of platform or entertainment avenue?
I think, if you look at the numbers, today there are about 400, and this is as per the EY FICCI Frame report which comes out every February, March. There are about 450 million gamers, right? And this is across the horizontal, and that number is estimated to grow to about 500 million. Now, this is as I mentioned, and this is not me saying. I mean, these are people like Ruchi Sharma and all, saying in their annual forecasting that these are gaming is the preferred destination globally for people as a form of entertainment now, and that is true for this market also. And as you know, India is a mobile-first market. The coincidence of the industry, although it's 10-12 years old, the growth story has severe coincidence with the Digital India initiatives about 7 years back, and it's true for the industry as well. I think that as I mentioned earlier, I do not see a huge impact. Yes, for the for the listed companies, since it's a economic direct impact on the revenues. It is showing in the listed company stocks. But as a destination for as a preferred destination within media and entertainment, I don't see that changing. But yes, we will see how this plays out. We are still hopeful because of unlike other industries, we've been getting this support right till now over the last 1.5 year to actually bring online gaming under a nodal ministry, which itself is is a big thing. And so we are hopeful that this will the support will continue to the industry.
Okay, to your mind, what really led to this 28% GST levy? You're saying that that there were positive signals that you were getting from from the GST Council, from MeitY. Was there any expectation of any kind that the 50th historic GST Council meet is going to deal such a blow to the gaming industry?
To be honest, there was, just to take a step back, there was a GOM that was formed in 2020, and then there were some changes in the state cabinets, which got saw some new people come in, some new states come in. The second GOM was also set up, and we had the opportunity to meet with all of them to to showcase the impact and also global best practices on how some of the other jurisdictions, where this distinction between games of skill exists, and how they employ valuation on the indirect tax. So all of that was done. Now in the GOM second report, although there was no consensus, but the the summary does say that that 28% on the platform fee or the gross gaming revenue. So the impact from 18 to 28 on the, so there are two parts, right? The amount of tax and then the valuation. So the amount 18 from current levels to 28 as suggested in the GM is a 56% increase, which which the industry which was suggested. But the impact of moving from platform fee to face value, that impact is 1100%. See, so I mean, you all evaluate industry sectors, and I do not know of any precedent of any industry trying to absorb or buffer that kind of upside.
So since this is part of the media and entertainment sector broadly, Roland, does it feel a little unfair that another entertainment avenue, like let's say going to the movies, is taxed at 18% of the ticket price, and in this case we're talking about 28%? And if I were to also, before you comment on that, I'd like to seek your comment on that, but one more point which is running through my mind, if you were to, let's say, compare online gaming with offline digital gaming, like let's say the PlayStation or the Xbox or the kinds, and when you were to go to the market and buy perhaps a DVD or a like of of that game, I don't know how it is today, I haven't played a game in a while, but if you were to purchase a game online or offline, what is that taxed at? Is that also taxed at 28%? Because in that case there could be some parity between online and offline digital games.
Yeah, I'm honestly, I have to check on that. But on the on the exact valuation for offline, but for the, I'm sure there is parity in that. It would be in the highest.
So then, would it be unfair? Is my question. Then would this taxation be unfair if there is parity?
Yeah, but the thing is that there is this entire settled jurisprudence on a distinction between a game of skill and chance, and that is showing in the direct taxation part also on the TDS. But in this case, they've clarified that even though it is a game of skill, it is 20%, not 28%. That so that rate part, I think, as recommended in the report also, is not the huge impact. The huge impact is really on the methodology of the valuation of putting it on face value rather than on the platform fee, because that 10% is what the platform's revenue is. The rest is the is the participation by the gamers. And
But
that
isn't
goes
that
back
the case? But Roland, wouldn't that be the case, let's say, even for a moviegoer? You buy the ticket, the face value of the ticket is 100 rupees, you pay GST of 18% on the face value and not technically on the earning of the theatre provider, PVR, for example.
Yeah, so that is some of the, discussions that we've had when the representations were made. That are exactly some of the examples that were given. And we had the opportunity to explain that. And that is, I think, in the other forms of gaming that have been clubbed with online gaming, which is horse racing and casinos, I think those examples were also considered. You're right.
Okay.
Right. Roland Landers, the CEO of All India Gaming Federation over there, joining us. I'm afraid we've completely run out of time here on the show with that discussion. But Roland, thank you so much for taking time out to be with us here on Business Plus on News 9 Live and helping us understand all about the online gaming industry. We will continue to track the story and all the further developments. But for now, Roland, thank you so much for joining us. And of course, thank you, Karthik, for being with us, helping us understand all about online gaming and the new taxation on it. It's a wrap here from my side. This is Krishna Kumar signing off. Keep it with News 9.
मैं इमरान अहमद खान नियाजी सबके दिल से हल्फ उठाता हूँ.
When Imran Khan came initially into politics, he thought his personal popularity would be sufficient for him. It didn't happen.
The retired military generals are openly saying that Imran Khan is a better choice.